Welcome one more day to the trader's game, where we are going to see one of the easiest and simplest strategies to use, but which in turn will provide us with a very high percentage of win rate and profits in the short, medium, and long term. It is a strategy based on the MACD indicator that can be used by both beginners and more experienced traders. It can be used in multiple timeframes, and above all it is very simple both to see and to apply, because there are some strategies that would be simple to apply, but it costs a little more to see them in the real market. Not this one in particular, it is very easy, and we will be able to use it in any market. As always, we are going to explain it in the Bitcoin chart. Remember that all our strategies, although they can be used in any market, we have adapted them a little to the high volatility of cryptocurrencies. And in the description we will leave you the link to the best cryptocurrency derivatives exchange in the world. It is BYBYT, and currently every 24 hours they have more than $9,000 million of trading volume, which makes them have the lowest spread in the market and above all with the lowest commissions. You can find all the cryptocurrency pairs you want and also enjoy up to $4,200 in bonuses, which you can claim as you use the platform. And now let's get started. As I said, this strategy is based on the MACD indicator. Here it is. We simply write MACD in indicators and we would get the convergence-divergence of the moving average. We click and this is what would appear. We do not have to configure anything in the indicator, since we are going to use it in the most basic and simple way possible, which does not imply that it is less effective, but that the initial configuration is already going to be valid for absolutely everything we want. The second indicator that we are going to use is the exponential moving average. I am going to give it twice since we are going to use two variables. The first one is going to be the 100 period one, which I am going to put a white color and I am going to increase the thickness a little bit, to see everything clearer. And the second EMA we would put it for example of pink color, also a little wider, and we would place the length of 200 periods. We would accept, and we would have something like this. Well, within this strategy we would have several variables. We will begin with the simplest for those of you who are starting in the world of trading and are looking for a profitable strategy in the long term, but that is not very complicated to see and use. The first thing to keep in mind is that the MACD is a more effective indicator when we have clear trends, whether bullish or bearish. And how can we know what trend the price is in? Well, very simple. In fact, I am even going to hide the 200 period EMA. I am going to leave only the 100 period EMA so that you can see it much clearer. And it is very simple. When the price is moving above that 100 period EMA, the trend will be bullish and we will look for long trades, while when the price is moving below that 100 period EMA, the trend will be bullish and we will look for long trades, while when the price is moving below that 100 period EMA, the trend will be bearish. Below that 100 period EMA, we will be in a downtrend and we will look for shorts or short trades. As I said, the strategy is very simple. In this case, that the price has moved above that 100 period EMA, we know that we are in an uptrend, so we will wait for a long entry confirmation on our MACD indicator. That would occur exactly at this point, at that crossover of the blue MACD line above the orange line. Also, we can see that exactly when that crossover occurs, also what we call histogram, this part here, would change from red, from negative, to positive. We could mark exactly that candle where that cut occurs, and that is where we should place our entry operation. And how should this operation be? We would first place our stop loss just below the previous low, and our take profit with a ratio 1.5/1, i.e., for every 1% we risk in our operation, we would win 1.5. As you can see in the next candle, we are in 1 hour temporality, that is, 2 hours later, we would get that winning operation. A little later we would have in this area a cut of the blue line above the orange one in the MACD. But would it be a good time to enter? No, because both lines would still be above the zero line. Basically, the MACD also has a zero line, which we could even mark in a more forceful way by placing it in yellow. Let's put the line, here it is, to see it better. And other rules, especially to keep in mind in the cryptocurrency market because of its high volatility, is that we only look for long trades when that crossover occurs below that zero value line on the MACD, and we will only look for shorts when the crossover occurs above the zero line. Then this entry would not meet all the requirements, as the price is above the 100-period EMA, so we have to look for long trades, but the crossover occurs above the zero line. However, a little further forward, we again have another break, this time below the zero line, exactly here. We would mark it and place our trade right at the close of that candle. We would place the stop loss below, and the operation with a ratio 1/1.5. And what about the 200-period EMA that we had added? I recommend placing it as well, to be a little clearer about the areas in which you are trading. In the world of cryptocurrencies, having much more volatility than other types of assets, we need an extra help to be better located in the market zones. As you see here, the price practically passed the 100-period average, but reacted and bounced off the 200-period average. And this is very useful in areas such as this one here, where the price is sideways and we do not know exactly where we are. Because here, as you see, we broke that 100-period EMA down, but again the price then bounced, and we know that cryptos, being so volatile, can vary more its price in a wider range than other types of assets. So if we also see that the MACD has completely collapsed and the price has formed a range between those two averages, and we also see that just this cut occurs at this point, we could again look for a long entry, which as you see has been given perfectly with that ratio 1/1.5. After a few candles we would have already had this operation in profit. Another detail that you have to keep in mind is that the further that MACD crossover moves away from the zero zone, both above and below, the more likely that the trade will be successful. That is to say, we could even enlarge the graph a little and we ourselves place a kind of average line, more or less by eye, where normally these crosses usually occur and where the operations come out correctly, to also have an idea that perhaps, in these intermediate zones where the price is lateralizing, we should not enter operations, and should only do so when all these rules that we have discussed are given, and when the crossing is also at a very large distance from the zero line, to ensure an extra probability of success in the operation. For the more advanced traders, who already control a little the theme of the ranges, the theme of the price action, this strategy fits them like a glove, because they can combine it with the ranges, supports, and resistances in a very simple way. As you can see, we place this line in this support zone, which in turn we can also mark at this point, since it would be forming this support range, where the price has been consolidating several times to then always push the price upwards. And the same would happen for the upper zone. We would have these zones that would mark that range, this time of resistance, and we can see how the price has been moving in zigzag inside this structure. Then, when we already have this basic knowledge, this strategy becomes very simple. For example, we know that the price is falling and we have this whole area of support zone, so there would be a higher probability that the price would bounce and start going up again, looking for the top. This even for more experienced traders could be done by hiding the EMAs, because we already have the information of both the range and the support and resistance. Then we could not only take advantage of those long trades that this strategy offers us, because as you see, here, when the price is consolidating in that support zone, we already expect that the price has a higher probability of going up. So we need to wait for that confirmation of crossing by the MACD. We enter just at that point, place our stop loss, and look for our 1/1.50 ratio. There it is. At that point we will have already taken profit. Even if we already have the complete information of this range, we could let it run to the top, which is where the price is expected to reach in this structure. But well, that is if you have a little more advanced knowledge, but if not, simply with your fixed trades of 1.5/1 ratio you would have already taken those profits. The same at the top, since we know the structure, we could also look for that crossover. It's well above that zero line on the MACD, we mark it, and we could look for this trade. In this case, before falling, the next very clear one that we would have would be this one here. As you can see, we bounce off this support, we have right here that crossover. So we place our trade, there it is, and we would look for that 1/1.5 ratio again. Again we would come out with our trade in positive. It is a very versatile strategy, and as I said, we can use in various temporalities. In the world of cryptocurrencies, due to that extra volatility, I recommend using it in hourly time frame, which as you can see works very well, but if we go down to a lower time frame, half an hour, we would adjust a little more of that cut to this area. Actually, it is not much, but in the long term it would make a difference, because here we would take our operation in half an hour, and in 1 hour time frame we would have opened it here, a little higher, and as you can see it would have also taken several hours longer to touch that take profit. As always, I hope you enjoyed the video. Let me know in the comments if you have tried this strategy, how it works for you, how it has worked for you. Leave us a nice like, it's free and it helps us a lot to continue creating content. Also, in the description you will have the link to the best exchange to trade cryptocurrencies. See you in the next video of the Trader's Game.